stories of regional collaboration, the power of intra-African trade, and the policy breakthroughs driving Africa's shared prosperity. This is Inspired Afrique, the pulse of continental unity and innovation, where we spotlight moves, deals, and collaborative dreams turning into reality across African borders. In this segment, we uncover how Nigeria's capital market can fund warehouses, ports, and processors. With us is Mayowa Ikotun, Head of Coronation Infrastructure Fund at Coronation Group. So let's get right into it. Talking about how the Nigerian capital market can actually finance ports, warehouses, and processing facilities. So how would you describe the logistics, the Nigerian logistics and processing infrastructure?
Okay, so that's an interesting sector, and it's a sector that, if properly harnessed, can really drive the economy of the country. This is because there are so many sectors dependent on what happens around infrastructures of warehouses, ports, and logistics. We talk of sectors like agriculture, where farmers need to store post-harvest goods. Talk about retail, e-commerce, oil and gas, pharmaceutical. It cuts across so many sectors. So this is a very important sector. But unfortunately, currently we don't have enough of these facilities to cater for the current need. Let's take it one by one. Warehouses, for example, we don't have enough storage facilities across the country to ensure we are self-sufficient and have enough to export, and with the goods still remaining in good conditions. When you talk about ports, most of the trades that happen in our ports happen with Tinkan and Apapa port. I think almost 70% of it. So what happens to those in far regions that need to either import or export goods? So we need to look at enhancing and making other ports across the country fully functional, and also reduce the pressure on the Lagos ports. And for logistics, I think it's getting better, but quite a lot still needs to be done. This is huge. It's hampered currently with insecurity and not a lot of players still operating within that space. And probably few regulations, either states or regulatory regulation, still hindering what happens within that space. But it's still a huge. It's a sector with huge opportunities to operate in.
Okay, so in terms of funding, why is it so difficult for traditional financing like bank loans or public budgets to actually meet the capital needs of these infrastructures?
Okay, so I would say the banks are trying, but like I said earlier, there's a lot to be done in that sector. Then for those that are currently not able to access finance or not accessing enough, few factors. One, there is a financing tenor mismatch. So what do I mean? I want to probably build or construct a warehouse. I would need time, right? You need patient capital, something that gives you time to construct, operate, then start making these repayment. But with the typical bank structure, it's probably short term, 18, 24 months. You are required to pay back both the interest and capital. So this puts pressure on these business owners. So they look forward to long-term financing that gives them ability to fully settle in without pressure on repayment, and also the facility well spread across long term of say 5 to 10 years. Then also some of these business owners, the structure and the corporate structure of their operation sometimes hinder them from accessing its financing. Some no credit history, so many things not well put together. So it takes time for them to get to this position. Lastly, I would say what also hinders them is on the security structure. So they're not able to provide either guarantees, or they don't have collaterals to use to back these facilities from the bank. So all these affect them accessing finance from the bank, and also even the bank playing heavily as they might have wanted to.
Okay. So given these limitations now, where does the capital market come in?
Okay, so capital market comes in various points. I'll start from my sector, the infrastructure fund sector. So the fund was set up having noted the infrastructure deficits within the country. So it gives these business owners ability to access long-term funding with diverse structures, different from how a typical commercial bank would structure its credit. And it also helps when it comes to the interest rates. It's a little bit moderate compared to what a typical commercial bank would give to them. So they're able to access this finance, and also they're able to access funds from other investors who had invested in the fund. So one, it gives them ability to plan their expansion for a much longer period with little pressure on repayment, and also help them when it comes to the interest on repayment.
Okay. Okay, so why should these infrastructure developers now turn to the capital market?
So even aside from accessing from the infrastructure fund, there are other instruments, commercial papers, for example. We've seen quite a lot of players within the sector come to the capital market. So players within the capital, such as investment bankers, have had to work with them, structure the business properly, and bring them to the capital market to raise funds. So while working on long-term plans, they are able to access finance through commercial papers to sort short-term and working capital needs. Also, along the line, they are even able to do much more by accessing long-term fund via even raising a bond with well-structured guarantees and other well-structured package to help their businesses. Then we've seen some of them even come to the capital market to raise equity, which is a long-term play, and making various other investors participate in their business. So the capital market has opened these many opportunities, which many players are currently accessing and enjoying the benefits.
Okay, so what capital market tools do you think are best suited for these infrastructure projects?
Okay, so first it depends on the strategy and plan of the business owner, what they're trying to achieve. Like I said earlier, say you are in the process to accessing the long-term financing, probably from international partners or even banks, maybe a bank of industry, for example, which the process will typically take a long time. So you can come to the capital markets and structure a commercial paper to work on your short-term financing. And also, like I said earlier, bonds can also be structured, right, to ensure they solve their long-term play. We've also seen quite a lot of players come to structure private placement that helps fulfill their various obligations. And like I said earlier, we've also seen some come to raise equity aside from debt instruments in the capital market, either private equity or raising via platforms such as NGX.
Okay, so let's move on. What are industrial REITs and how can they back with financing?
Okay, so let me try to break this down. We see quite a lot of people play around REITs now, but some probably not in a well-structured way. Or they are structured REITs approved by Education and Exchange Commission that some houses are currently operating. But we want to bring this down to the context of what we are saying. So what we're trying to say is, say, as against everybody building warehouses. So we have one warehouse in Ikeja where people can come pay some certain amounts for a period of time and make use of this. Then there will be investors behind that have probably put funds together to ensure this is a reality. Then you can make it unitized where everybody then gets a bit of the pie depending on how their contribution to the capital is. So it's something that could also work considering the situation where I think it would also work very well with players around retail and e-commerce sector, where you don't need a warehouse for a very long period of time. You don't need it for short term whenever you have your goods. So you could have silos of these across the country. Then you well put down structure can then be structured behind to have investors, to have trust, to have full structure on how people can then participate and make good returns.
Okay, so let's talk about the NGX. Can you walk us through how a port operator might use a bond issuance on NGX to finance an expansion project?
Okay, so let me take this through two ways. NGX has been a very good platform for quite a lot of investors. So any investor going to the NGX platform is looking to invest in an entity that has listed with NGX and either for capital appreciation or to be part of what the company is doing. So the NGX has also allowed infrastructure funds to list on the platform where retail investors also participate. So if an infrastructure fund lists on the NGX platform and an investor participates, so what in turn has happened is you've participated in the fund financing business owners that are seeking funds to construct projects across warehousing, logistics, and ports, right? So the second part would be the business itself coming to list on the exchange, and that will take some process from corporate governance and it will take you having financial advisors to work with you all through the process and putting your books in order to list on the exchange. So once you list on the exchange, that means you've opened the company up, right? Make it a public entity. Then you have more financing to continue to expand your business and plug whatever infrastructure gap you have in the business.
Okay, so Nigerian's pension fund has a large AUM.
Yeah.
So what would you say is the potential for pension funds and insurance assets to be used in funding infrastructure?
So PFAs have played a very significant role in investing in infrastructure funds. I think as I last checked, the total investment in infrastructure fund by PFAs is roughly around 900 billion in infrastructure fund and other alternative assets, right? So they've played significant role to drive this sector of the economy, and they continue to. So they're a very significant player in that sector, and their continued participation had also helped in at fulfilling the fund's various objectives to reducing the infrastructural deficits within the country. So there are guidelines across PENCOM and NICOM for both PFAs and insurance companies that allow them invest in these funds, and they continue to participate actively.
Okay, so what are some of these guidelines that they have to follow?
I think for PFAs, they are allowed to invest at least like 5% into infrastructure and specialized funds. NICOM also gave specific guidelines as regards how insurance players, insurance companies can invest in such instruments, which includes the credit rating, promoters, key management staff and all that. So there are clear regulatory guidelines to both PFAs and insurance companies on how they can participate. So that takes away the bottleneck of, oh, we don't know if this is something we can do, but so it's been clearly stated in both guidelines. So, and they've participated well so far within the infrastructure funds and other alternative assets.
Okay. So speaking about regulatory guidelines, what are some policies that are still restricting the capital market from investing in these warehouses, ports, and then infrastructure projects?
Okay, so as much I would say all regulatory bodies have been very supportive, from the Securities and Exchange Commission to PENCOM and NICOM that we just spoke about, by at least giving guidelines on how to register these funds, how to structure these funds, how to finance various projects, to the reviews, and how PFAs and insurance companies can invest, right? So, so it takes the first bottleneck off. Can there be enhancements to make things better? Probably yes. But we've seen the regulatory bodies also have shown willingness and listening ears to concerns and feedback on how to get things better. So I would say so far it's good. We can, and they've been very good cooperation between the operators, the capital market operators, and the regulators to continue to improve and get things better. And as you know, there was a recent ISA 2025, which is part of the regulator taking feedback from the capital market and taking quite a lot of ambiguities off whatever rules and regulations are across various parts of regulation. So it's been good so far. We can only just continue to work together to make the regulations better.
So there are no policies that are actually still standing as barriers or like restricting the capital market?
No, so as like I said, so many people are now playing in that sector. We have many players come, both from investors to capital market operators to even project owners themselves. There's now much more awareness to what we are doing within the capital market. So, but like I said, it can always get better. We continue to work with the regulators to make sure things are better. But currently, there is no stiff bottleneck that is holding anybody back from doing anything.
There you have it. The capital market can actually aid funding for infrastructure development, warehouses, ports, and processes. Want to find out more about trade in Africa? Join us next week on the African Trade Show. I remain your host, Sunny Delight.